We're looking at, we tell people for lower-end homes, starter homes, 2011. You're looking at vacation homes, 2012, 13. If you're looking at more upscale homes, McMansions, they're going to take longer to come around, but at least they'll have deflated probably mostly by 2012 or 13. If you're looking at commercial real estate, 2013 plus. So there's a whole kind of thing there. But yes, as much as things look good now and interest rates have been low up until recently and they're rising, we tell people you got to be patient here. Cash wins. In deflation, cash wins. Even bonds are going down in value now because interest rates. I mean, I think there may be one more run in what I call the crisis commodities, gold and silver and things like oil and natural gas. They're correcting now. We think they're going to correct for weeks to come as the dollar's rebounding here. But I think if the banking system starts to melt down and things, there'll be some brief period of time, maybe into late this year, early next year, and maybe from late August, early September, where you see one more run in those commodities. But in the end, a down economy and a down world economy means less demand for commodities and deflation. And gold will always go up in an inflationary environment like the 70s, but it's not a deflation hedge once you get over the crisis building. Once the crisis sets in and actually causes deflation and prices are going down and other commodities are going down, gold, I think, will follow.
The yellow metal has been quite an interesting deflation hedge.
Well, our problem is that most of the times you get a deleveraging and banking crisis like this, the governments either make it illegal to own gold or they freeze gold, and they almost always fix the price. So we can't tell what happens with gold. And that's why I call it, I like gold because I think another crisis is going to build, and it's going to be an unexpected crisis. I mean, again, everybody, and all these people are all saying the recession's over. Newsweek had on us cover, now Business Week. That enough is a sign to run for the hills. But this is going to be unexpected, and I think when things start to fail for whatever reason, yes, gold and silver are going to like that. But I would say, look, if there's another run, since we don't really know what happens, and I suspect deflation will get them in the end, if gold went to $1,200 or $1,600 an ounce next year, I would tend to sell it, move into cash, and then wait to see what happens. If we keep going into deflation crisis and gold keeps going up, then yes, maybe it is a deflation hedge. But history tells us it's much more of an inflation hedge, and this is not inflation.
Well, please tell folks a little bit more about your work, and not to mention the fact that I believe you have financial advisors that can help folks with their portfolios.
Yeah, if you go to our website, hsdent.com, we have a newsletter. It's the best thing we offer. It's not just up to daily updates when things get weird like recently and we think a top's putting in. It's a monthly newsletter that looks at near-term market trends, but quarterly we update people on all of our long-term research, and we are always adding new dimensions to our research. Most people only get that every 5 years when a major book comes out. We also have a network of financial advisors that are trained in our research. I mean, you have to evaluate them yourself, but you can go to our website and find out who they are and where they are. And we have a lot of free downloads and information because, I mean, that's what you really want from a website.
I'm sure you heard that Peter Schiff is against Christopher Dodd. Do you have any political aspirations?
No, I don't. I would love to consult the politicians. That's what my father did. He was kind of like Karl Rove to Richard Nixon and helped him get elected by fighting the Wallace threat in the South. To me, it's a very difficult thing because you have to politicians are always reacting to trends. I want to be ahead of trends, and I'd like to help some smart politicians, whether they be here or Brazil or India, see these cycles coming, see these demographic trends coming because they're so easy to see coming, and government just doesn't see it. They're always reacting to what's happening. In fact, the worst reaction here was that, as much as free market capitalism is working here by bubbling up and maximizing innovation and then bubbling down, creating massive efficiency and reduction of debt, it went a little nuts here. And then the government trusted it too much. I mean, a free market needs rules and regulations and systems. And so the government kind of failed there, and now they're probably going to react the other way and put on too many regulations. So government's a tough game, and I like to be ahead of the curve, and then I'd have to have the right politicians. And
what about safe places to live? I mean, you seem to have a strong handle on demographics.
Well, we've said for a long time that you can do things to protect your investments and get it more into cash and wait for the buying opportunities down the road and benefit. But for your life, probably the best thing you can do is be living in an area that's not in the heavily populated coastal areas, not in the greatest real estate booms and bust, more inland. I mean, live in Austin, Texas, all of Texas is barely bubbled, so they're not going to go down that much, and they're not going to have as much unemployment, they're not going to have much crime and bank failures. I mean, crime goes directly with unemployment in a bad economy. So go to areas that don't have high crime, move more inland, move in the outer edges. I'm in Tampa, okay, it's in Florida, yeah, it's a real estate disaster and stuff, but I'm on the outer edges of Tampa, and I'm not in downtown, and I'm not on the coast where hurricane premiums are rising at the speed of light and stuff. Going inland and in the exurban areas of larger cities is best. And if you really want to be safe, go out to a nice, peaceful college or kind of vacation town. Not quite Aspen, that's a little too high, but someplace like that, Tucson, Arizona or something, where you're not going to feel a lot of this. And if you're in a retirement community with a lot of older people, these people aren't going to be rioting in the streets and stuff, and they're already living off their investments, albeit a little less. So, it's just kind of common sense. Move out of the way of the big stuff. And frankly, New York City's a tough place. I mean, it's the number one terrorist target, and we even have some cycles that suggest terrorism's likely to rise a bit and international conflicts in the next year. So, stay out of the way of deflation, bubbles, and high unemployment, and what I call, angry all-star wrestling fans, because they're getting angry and they're going to get angrier.
Okay, Harry, thanks again.